All right, we've been talking about the debt ceiling debate in Washington, but what happens to many of the nation's infrastructure projects if the federal government goes into some kind of shutdown or technical default? My next guest has given some thought to this matter. Mark Weisdorf is the Chief Executive of Infrastructure Investments at JPMorgan Asset Management. Mark, it's good to have you with us. Thanks so much for coming in. So what are the implications? Because we know that government spending from Washington tends to go hand in hand with a lot of local and municipal spending, grants that are matched, for example, in order to produce and develop infrastructure. What's the likelihood if anything goes wrong in Washington?
Well, fortunately, there aren't many short-term implications because all of the financing for projects that are in progress has been arranged.
So it's already in place?
It's already in place. So in the short term, everything's okay. Hopefully that gives the politicians in Washington the time they need to arrange something so that projects that are on the drawing board, and there's a lot of projects on the drawing board, that'll get backed up pretty significantly if this debt ceiling isn't resolved within the next 6 to 9 months. Hopefully it'll be much sooner than that, of course.
Well, we hope so, right? But I mean, but the idea being that if nothing happens, then what's the technical process? Plans that have been submitted to the federal government, requests for proposal, they get backed up because there's nobody there to actually look at them.
They're all on hold. There's nothing that can move forward because there's no provision for the government to participate in these processes. So it becomes a major problem because there's a lot of projects that need to be done that states and municipalities are working on. These are projects that often take 4, 5, 10 years to complete, and without every step along the way being financed and being able to operate efficiently, these things can really get backed up and create major problems. So hopefully this is resolved very soon. In the short term, projects that are in progress are in good shape.
All right, what about the potential for private investors to come into the infrastructure market and actually lend money in order to build these kinds of big developments, whether it be dams or roads or fixed bridges? Is it possible that the private sector will want to come in and offer its capital?
Well, I think one of the silver linings, if you will, to these cloudy days is that states and municipalities will look increasingly to the private sector to come in and partner with the public sector in getting these projects done. The government, the federal government, isn't as reliable as it should be when these other debates are going on and the states and the municipalities can't rely on the federal government for funding. So I think increasingly, as I say, the silver lining is that the states and municipalities will be looking for other sources, other alternative ways of financing their infrastructure projects. And that means the private sector, not just for debt, but also for equity. And public-private partnerships are really a way forward that, the U.S. is a little bit further behind as compared to many other countries around the world.
Like, for example, the United Kingdom has had public-private partnerships that have worked in the past.
For over 30 years, in fact. And they're regenerating their program, they're improving it, they're changing it. And they're not the only country. I mean, Canada, Australia, Spain, other countries around the world have been using these programs. And I think, as I say, these sorts of challenges that create bottlenecks in the system that don't allow maintenance of infrastructure, building of new infrastructure to be happening on a seamless and scheduled manner will cause people to look at the private sector as maybe an alternative solution.
Do we have the financial infrastructure in the United States in order to fund these real-world infrastructure projects? Do we need some kind of infrastructure bank, for example, that would, offer low-cost government support or insurance for the private sector to then come in?
Well, it depends on the project. Some projects that are longer-term projects that perhaps have a greater degree of risk associated with them, those would be helped by having an infrastructure bank. And we know there's a number of proposals down in Washington with respect to infrastructure banks. And I think those proposals will be turned to after this debt ceiling debate is resolved. But many projects don't require an infrastructure bank. The private sector, pension plan money, other institutional investor money is ready and waiting to participate in these projects, both new projects and existing projects that require maintenance and expansion as opposed to new greenfield development.
How about some examples of why investors might want to participate? I mean, you talked about utilities, for example, in some research. What about utilities is offering a roadmap for the future?
There's a number of potential roadmaps. I mean, investors are interested in infrastructure because of the growing, predictable, low volatility cash flows that infrastructure investments can provide. These assets are essential to the communities that they serve, and they're very attractive. They have low correlation to equity and fixed income returns. They provide very nice diversification. So investors are very interested in the attributes of these types of investments. We've seen 5 trend changes, 2 of which are major tipping points that make it particularly interesting for investors at this time to consider infrastructure. And we're seeing a lot more interest in infrastructure because of these tipping point changes and tactical opportunities. I'd be happy to review those with you.
All right. Well, we're going to have to wait that for a later time, but I want to thank you very much, of course, Mark Weisdorf, CEO of Infrastructure Investments at JPMorgan Asset Management. Thank you very much for your insights. We're going to have to look forward to those infrastructure banks, for example.